its equity is increasing basically, right? Because the size of its debt relative to how much it made in Bitcoin was effectively diminishing, right? Because the debt stays the same and then the assets are going up and up and up.
Exactly.
So as the assets continue to go up, he's just continued doubling down on that bet.
Has the bromance between Trump and Musk ended? That is the big question. That is the big question for Tesla. And certainly options is one way to play it. But we're also going to have a look at a little stock called Microstrategy today, because the options space in Microstrategy is especially interesting. And of course, we know the underlying asset is especially interesting as well, especially for Imran, because this man has a podcast and he is just back from Dubai. Tell us what was going on in Dubai.
Yeah, so it was really exciting. I mean, so there was a big crypto conference in Dubai end of last month called Token 49. So
Right.
this happens every year in Singapore, in Dubai, etc. So we went out there. The sponsor of our podcast, Deribit, biggest crypto options exchange in the world, kindly took us out there.
Nice.
We then met some of the high-profile names within the crypto space, interviewed them, saw what they had to say. So that was pretty cool. But obviously, yeah. So I do this podcast weekly, right? It's obviously this was a bit of a special one, doing it in Dubai, and it was crazy interviewing that many high-profile people within the space. But generally, I get in a studio in London and I meet people in the space once a week, basically.
So, and give us an idea of the flavour of the kind of people involved then. Was Saylor there?
Saylor, we didn't get to meet Saylor. I mean, I don't even know if he was there at Token. Yeah, next time, yeah. Maybe we're not big enough yet for that.
But the stock is especially interesting. But why is it especially interesting in terms of volatility?
Yeah, I mean, it's a super interesting stock because if you look at what it did like over the last year or two,
Let's get that chart
when
up.
Bitcoin started exploding higher, with the whole ETFs coming online, Bitcoin ETFs and bringing in institutional capital and stuff, this stock is a levered bet on Bitcoin, right? Because this guy's just been borrowing money from capital markets to pile it into Bitcoin. MicroStrategy, you think of it as like a levered long to Bitcoin, okay? So it should really be moving 2 or 3 times what Bitcoin does, okay? Right?
As you said, because it's borrowed money, so it's got debt, and so the actual equity is smaller than the amount of
Yeah, but because its holdings of Bitcoin have gone up so much, it's actually done really well, right? Because now its equity is increasing basically, right? Because the size of its debt relative to how much it made in Bitcoin was effectively diminishing, right? Because the debt stays the same and then the assets are going up and up and up.
Exactly.
So as the assets continue to go up, he's just continued doubling down on that bet. So literally, as the stock goes to the moon, when you look at the premium, the NAV premium they call it, the net asset value premium. So you look at where the stock's trading versus what its assets that it's holding are actually worth, and the stock trades.
Bitcoin.
Yeah, exactly. And so the stock trades at a massive premium to where it should, based on the value of the Bitcoin that he actually holds.
So the market cap is about double of its underlying assets.
I think it's like 1.6, 1.7 now.
Right.
But it was double. Right?
Of course, it's come down.
Yeah, so it's come down. And that's the point. So when this premium goes up, he actually takes advantage of that, whereby issuing, convertibles and various tiers of stock, he issues them into the market, and then he takes that money and goes and buys more Bitcoin. So he's effectively closing that premium himself by issuing more and more stock. But for some reason, people keep buying the stuff that he issues. So the question is, why are people crazy? Why are they paying the wrong price to buy Bitcoin when they're buying this stuff? And the logic is that the convertible bonds that he issues are not just a pure long play. They're not a beta play on crypto, right? People aren't buying those to participate in Bitcoin upside, right?
Why are they buying them then?
They're buying them to arbitrage the volatility, okay? Right. So when you're a convert trader, if you're a convertible hedge fund and someone issues a convert, the value of that convert to you is very much a function of what the embedded optionality is in that convert. Okay,
so a normal bond, i.e. you get your money back, is the debt, but on top of that, there's this.
There's a call option. right? So with a convertible bond, there's like a call option on the stock, on the underlying, okay? So if you buy a convertible bond, you're essentially buying a bond plus a call option. So the price you pay for that convert is going to depend on the value of that embedded call option, okay? And the value of that embedded call option is going to go up or down depending on the volatility of the stock. So MicroStrategy being a crazy volatile stock means that it's quite attractive to own a convertible as long as the volatility, the implied volatility of that call option in the convertible isn't too expensive. You're getting quite cheap volatility that you can trade, basically, right? So that was why there was like endless demand to take up these converts. It wasn't like people were saying, because you look at it and the coupons are 0. So you're saying, why the hell are people letting Sailor borrow money for a 0 coupon? At face value, it doesn't make any sense. But it's because the way he's priced it in the convertible is such that people are getting access to MicroStrategy vol at some cheap number, like 50 or 60 or something, when it was realizing double that. It was realizing 120, okay?
So the stock is very volatile, but he is offering them an
Cheap
option
volatility,
here when they think that they can buy and sell and buy and sell.
Correct. So the realized vol they think they can capture is higher than the implied vol that they're getting the convert at, basically. Right?
Now, if you do too much of that,
which is what I think he's done.
Right.
Then what's happened is he's flooded the market in MicroStrategy vol, it seems. And the reason we say that is because if you look at what MicroStrategy vol's done in the last couple of months, it has completely crashed, both in implied terms and in realized terms.
And here we can see, using the Tasty platform, you can have a look at this thing called IV rank. And that is a measure of how MicroStrategy volatility is relative to its own volatility of the past 12 months. And that is out of 100, and it's right down at 11. So that's exactly as Imran says. This thing, the realized vol, is trading
the implied.
Lower. Sorry, the implied vol is much lower, and we can see that it's down to around about 60. Yes, between 60 and 70.
Yeah. So now it's like it almost feels as though the kind of grind higher in Bitcoin is, as people, obviously all these institutions, all these other corporates are now coming in and copying the Sailor strategy, and they're switching their treasuries into Bitcoin and stuff. So you've got this slow grind up in Bitcoin, and even dips in Bitcoin are getting bought by these treasuries. So it's like a dampening, the flow and what he's doing is dampening the downside vol of Bitcoin, okay?
Right.
And then that in itself means that the MicroStrategy stock becomes less volatile.
Yeah.
Then on top of that, the entire street is getting long MicroStrategy vol via all these converts, and they're delta hedging it every day. So that becomes a vol suppressor as well. So it's kind of like it's sucking all the vol out of the stock, basically, which is really, really strange.
Let's touch on that, because this is really interesting, even for those of you that have got no interest in options, but you do trade MicroStrategy. Why does a large proportion of people owning converts, why does that dampen the vol between a stock, for example, when it gets above the strike price?
It's because they're gamma hedging it, right? So options have this thing called gamma. Right, and gamma just means that the delta of an option changes when the asset price changes. Okay, so when you're a vol trader and you want to neutralize your directional exposure and you're just trading volatility, you take an option and then you trade the right amount of stock against it to be delta neutral.
You're basically fine tweaking every day, aren't you?
Yes, and then when the asset moves, the delta hedge that you put on is no longer correct because the delta of the option's changed, because it's a dynamic thing, because it has gamma, right? And then at some point you'll be like, okay, the delta's moved enough that I need to put a little bit of extra short position on if it's gone up, or I need to buy a little bit of my short back if it's gone down to rebalance my delta.
I think the very simple way of thinking about that is you want to drive at 60 miles an hour. You start going downhill, you have to take your foot off the gas. You start going uphill, you have to put your foot on more gas, right? When the stock drops, then you can come in and buy back some of your stock, your short. When the stock goes up, you can sell more.
Exactly.
And so
if the stock just does this, up, down, then what you're doing, you're selling the stock when it goes up, you're buying it back when it goes down. You're capturing the volatility, right? That purchase of stock and that sale of stock, you're selling high and you're buying low. Those trades that you're doing obviously make money, Because
Yeah.
when you buy something low and you sell it high, you make money,
Yeah.
right? You just do that over and over again, and that's capturing the realized volatility. Now, the flip side of that is that you have time decay when you have options. So because you've got that gamma that you're trading by selling and buying, the other side of that coin is that you're paying time decay for that privilege, basically. So hopefully you will make more money trading the stock than you'll lose in time decay.
Yeah.
Yeah.
What implications does that have? Now, there's a reason that Microstrategy has managed to sell a lot of convertible bonds, more so than a normal company, right? And that is because Microstrategy, if you do too many converts, this happens, right? And the vol gets suppressed. But Microstrategy isn't trading on its own market cap of 110 billion. It's trading on the volatility of its underlying asset, Bitcoin, which is a 1.3 trillion dollar market.
Like that, yeah.
So you are trading this 100 billion stock on an actual asset class of over $1 trillion. And that's the genius of Michael Saylor and the genius of what he's doing. But if everybody starts doing it, it just...
Yeah, exactly. But right now, it's like, it seems to be a trend, right? Like more and more people are saying, okay, we're happy to park our treasury in here. I don't know how much people are leveraging themselves and borrowing money to buy like he's done, whether they're just saying we've got X amount. Because when he first started, he had $500 million in treasury and he just switched it to Bitcoin. It was only then he convinced himself, I'm just going to borrow as much money as I can because rates are so low and I can just access it. He thought it was free money, so he did it.
Yeah.
Turned out he was kind of right, you know.
Yeah, so it's evolved.
Yeah, but I feel like, you know, it's one of those things, like once everyone starts doing it, if everyone gets too levered on that trade, then it's going to create a bit of an air pocket down at some point.
Yeah.
But it doesn't feel like we're there yet. It doesn't feel like enough people have done it and enough people are leveraging themselves to that trade.
And every day that they're buying Bitcoin, they're renewing and creating more interest in the strategy because you would think Bitcoin price goes up on the back of that.
They're literally purchasing Bitcoin with the money that they're borrowing, so that is supporting that trade to some extent, right?
Yeah.
But so what you need really to unwind all of this, what you want people to be too levered to the trade, right? Because MicroStrategy, because they've made so much, their leverage probably isn't that bad now, right? Like they've got a lot of cushion to the downside. But the new entrants into this, I mean, GameStop bought Bitcoin for crying out loud. Like, what the hell? So anyway, what you want to see is too many people getting levered to that trade, then some sort of exogenous shock that is like, you know, liquidation of risk assets. A bit like what we saw on Liberation Day when the Trump stuff happened, right? Something like that happens, and then a load of people need to unwind. But also the question is, how sticky is that money? If you're parking your treasury in there, you've got to think that's quite sticky money, right? So again, it's a hard one, but yeah, it's interesting.
And then what about general volatility around the S&P? What are you thinking of the index here?
Yeah, I mean, it's come down a long way, right? I mean, the world looks pretty different since April. I think we sat down, didn't we? And we were like, you know, are we buying the dip here? And we were looking for upside plays to try and buy the dip, right? Which I think we suggested a few.
5,200, I think we were at when you last came in.
Yeah.
On the S&P.
Yeah, something like that. So I think now my sense is we've probably gone a bit too far. I still think there's a ton of uncertainty out there. I think the market's a little bit complacent around trade deals and stuff. Basically, it's quite funny. Like, Trump has become a bit of a joke now, right? People are now starting to call him TACO, right? Which stands for Trump always chickens out or something, right?
Which he has so far.
Yeah, so the credibility of his threats are going down. So he says something and people are like, oh, but he's just going to reverse it in a week, so whatever. So you can see, like, they hiked steel and aluminium tariffs yesterday. He's talking, you know, about whatever threat he made. I can't remember the last one because he makes so bloody many, right? But the market's just like, whatever. We know that you're just kind of making these threats, but you back down every time.
Yeah.
So I guess for me, the way the market's reacting feels a bit complacent, okay? And because the deadlines for these tariff pauses don't happen until July, right? There's still some room for quite a lot of noise still, I think, right?
Yeah.
Back and forth between these negotiations where people are trying to, you know, play hardball. So I feel like the market still might not believe the hardball, but I think there's a lot of room for negotiations to kind of look like they're breaking down and stuff like that over the next month. So I think the vol market's probably overshot a little bit to the downside. And so I think owning things like July VIX, that's kind of one of my positions right now. I own a bit of July VIX. June VIX maybe is a bit, not sure it's going to work, but I think July VIX probably holds up quite well.
Let's have a look at the VIX for you as well. Yeah, there it is, of course, the spike. Now we're back down to 19. So how are we looking, June, July, August?
Yeah, so there's a futures curve, right? So that's the VIX spot, but you can't actually trade the VIX spot. The only way to trade the VIX is through VIX futures or options, right? So if we're at 19.5, I think the June future is kind of in line with that level. July future is going to be a bit higher. August going to be a bit higher. It's called a contango when it's upward sloping like that, right? But the
normal shape, isn't it?
That's a normal shape, yeah. But the idea is the front contract's usually the one that comes under the most pressure when the market doesn't do a lot, right? So I think we may see a bit of pressure on June, but I think July is going to hold up relatively well because of all that uncertainty, right? And the fact that court tried to block Trump's tariffs and stuff, again, that throws a load more uncertainty into the mix because now, okay, if he has to then circumvent certain rules and that, I don't think he's just going to back down and be like, okay, yeah, you've handcuffed me. I'm not allowed to do what I want to do. Right. So I just think that doing those sort of things, like poking the bear, is going to introduce more uncertainty. And for me, the easiest way to play that is through owning a bit of VIX, basically.
And hasn't Elon just done that, right? Elon has just, as far as I'm concerned, it's the emperor's new clothes, right? We all talk about what the budget deficit does and what the federal debt level does, debt to GDP. But nobody, as long as nobody really speaks about it and nobody looks, Moody's, what do they know, idiots, right? Doing the correct thing and doing their job. As long as nobody highlights that America is going towards a much bigger financial crisis than it was, then the emperor's new clothes look fantastic. But if somebody that was his right-hand man starts highlighting it, then, is that lifting the curtain?
Yeah, it's an interesting point, right? It's look at the bond market, right? The bond market is trading really badly, I would say, right? The way long-end yields are trading. And it is this kind of shift in mindset that the debt sustainability issue is real, right? And people are like demanding higher yields for US debt because it's like, yeah, you said you're going to cut all this spending, and Doge was a drop in the ocean, right? And now they practically abandoned it, and now they're coming in with this big beautiful bill and stuff. So yeah, I do think the bond market's trading badly, and people are using alternatives for safe havens, right? Gold, that's what gold's done so well. Gold's absolutely exploded. Bitcoin's actually catching a bid because of the same reason, right? So people are saying US bonds are no longer my diversifying asset in my portfolio.
That's the 20-year bond there. If you bought that this time last year, in summer last year, you have lost. You're not meant to lose 12% of your money on bonds, are you? 12% you've lost being long the 20-year Treasury ETF.
Yeah. So I tried to sell some put spreads on that. They haven't made me any money yet. They haven't lost me any yet, thankfully, because we did have a little bounce from that oversold level. But yeah, I'm not convinced by the price action. I'll probably be getting out of that trade quite quick.
Yeah.
Yeah.
It's concerning, isn't it, when you get to a point that US Treasuries are actually ones, because of course that caused the SVB crisis in the first place.
They are putting in measures like this supplemental leverage ratio for banks and stuff, where they're going to be able to hold more on balance sheet and stuff, right? So, because that's the thing, like, because we know the administration wants lower yields.
Yeah.
You got to think that there is going to be some flaw in this thing, right? But at the minute they don't seem to have found the flaw, right? They don't seem to have put anything in place where the market's convinced that, okay, there's a backstop to the bond market here, right? So I don't know at what level. I thought at 5% in long end we would see that, and they'd be more aggressive about whatever they're doing.
Yeah.
And some people would argue, when he came out with the 50% tariff on the EU, it was to spook the bond market back for yields lower, right? It was like, okay, nothing else is working. Let's just let's just bring the tariff thing back, and so yields can come down, because the yields were running away to the upside, right?
And because the equity market is giving him the license to do that.
It is,
right?
yeah.
And there you go. There's, when Imran's talking about 5%, 4.9999 on the 20-year, and the 30-year 4.988. What implications does that have for the Federal Reserve? What on earth does Jerome Powell do going into the next meeting, seeing that inflation actually looks all right? Unemployment on Friday is actually a big thing, isn't it?
Yeah, that's what everyone's going to be latching onto, right? I mean, it's a tough one though, right? I mean, I feel like Powell's been pretty consistent, saying no rush, no rush, no rush.
Yeah.
Right? No one really believed him, but he's been holding firm on that. Okay. And even when Trump was trying to apply pressure to him to cut rates, he didn't flinch. Right? So Powell's kind of taken himself out of the equation to some extent. Right? He's just said, we're waiting. There's a lot of uncertainty around what your tariffs are going to do. We need to wait before we make any decisions here, right? So I think at some point Trump's going to realize, yeah, I can't pressure this guy into doing anything. I've got to get my own policy straight. I've got to figure out, instead of changing my mind every week about what I'm going to do, I need to know what I'm going to do, and make these deals with these countries.
Yeah.
And so then corporates, Powell, everyone can see what the lay of the land is, and then actually make some damn decisions.
That is the real pain that's being done, isn't it? The unknown for not your hyperscalers, but your real businesses, the Home Depots, the banks that aren't in bed with a...
Yeah, and this is why the Russell's underperforming, right? Because these are the small businesses, and it's like they haven't got a clue what's going on.
They could be the first set of stocks to warn. The way I see it, the pillars are jobs, and then it is earnings for companies that are worth less than 100 billion, and our domestic US, and you'll just start to see these domino effect. Then what happens with the steepener? That your concerns, you'll have to have some kind of stimulus package. Gold will go through the roof, the dollar drops again, and then you're into some pretty muddy water.
Yeah, I mean, it is really interesting this time around. Like, if we get weakness, you're used to seeing treasuries and the dollar being like safe havens. This time around, it's the opposite, right? The correlation's completely flipped.
Yeah.
So it's made the investing game quite hard, right? Because those old correlations that you used to rely on have totally changed, right? So you have to figure out, okay, well, what is actually going to perform now in a US recession if the dollar and treasuries are going to get hurt on that? Right. This
is the really exciting bit about this job or this, investing as a whole. It's an art.
Yeah, it's constantly changing. We've been in this game for 25 years and we're still like scratching our heads a lot of the time.
Yeah.
Right? Yeah.
So there is, if it was that easy, there would be a lot of algorithms and coders that would be rich, but it's not like that.
That's right. And that's why algos work for about a month or 3 months and then they break, right? Because the market constantly changes.
Yeah. And those quant models, once a year, you're in a spot of bother there. Imran, fantastic. Now that's been an incredible conversation. Now on the platform, you have a lot of subscribers, 22,000 on Twitter now, I see.
Yeah.
What's your Twitter?
Options_insight.
Options_insight.
Yeah.
And then website, I believe we've got up here. That's
options-insight.com, yeah.
There he is. Look at that.
Cheesy grin.
So when was that picture taken then?
Few years back.
Yeah, a few years back. So yeah, there you go. Imran is a champion for Tasty as well on that platform that your subscribers
Yes, I've got an online course where I showcase some of like the Tasty platform and how to use it and things like that. And then I've got a community as well that I'm building where I kind of go share my trades, give my sort of daily color on the options market, what's going on. I've built all these like proprietary dashboards that help me kind of try to identify opportunities
Right.
in the cross-asset vol space.
Fantastic. Pleasure as always, sir. We'll see you again soon.
Great to see you, mate.